All right, guys, we got another Sunday scan coming at you, this time for September 12th and the week ahead. Market has been, for me, the slowest it's been this past week, probably all year. And it's just the gap and the grind and the continuation kind of patterns. There isn't really any overextended charts right now, which is typically, my wheelhouse. I've had a lot of long trades lately, but I just keep on selling them before they, go nuts. I was long AMC, I was long a bunch of other different names, but I did, just enough to sell them right before they took off. So that's fine. But one of the biggest things that I think that has helped me in this current market is just, relax. You don't need to place a trade. And I used to, kind of think that you had to be involved. Not really think, but, it's just second nature. As a trader, you just feel the need or whatever. It just kind of sucks you back in and you end up just trading to trade, right? And so one of the things that I probably repeated every single day this week has been the need to just relax and wait for things to come into your wheelhouse. I want to be confident about a trade. And if I'm not confident about a trade, then it's not really worth taking on risk. I'm not looking to just take a trade to make small money here and there. I'm looking to focus on those A-plus setups so that I can, exhibit my strengths on them and, make a big trade. But if I'm going to be just coming to the market every single day and just trading whatever's, gapping up or gapping down and just trying to scalp, for me at this stage, that's not what I'm looking to do. I'm looking to wait for things to come into my wheelhouse. And that's something that is a lot different than how I used to trade, in the sense where there's a gap up and you just try to figure it out, as the day progresses. So there definitely has been opportunity. It was a nice end of the week last week on ISEE. That one was a nice kind of A-plus type setup. I would have preferred it to go even higher, but we had a 10:25 a.m. catalyst. They had a fireside chat, I think, with Wells Fargo. And, it pretty much just ran right into that. And right at 10:25, it started to kind of peak and come in, which, if you're riding into the catalyst and they don't say anything, exciting or what you expect, or maybe, say something that somebody perceives as negative, whatever, it's going to start to, fade. So I got on the right side and I just let that thing work throughout the day. And I did the same thing 2 days prior, where I had a big trade on it, was all the way to the lows, and it was a really big trade for me. But then it swiped up, consolidated, and started to grind a little bit higher. And so that is one of those types of moves that usually catches me on small caps. So if you look back on, I think it was maybe Wednesday, but it was under 14 IC. And it swiped back up over 14 to about 1430s, 1440s, then consolidated 1470s, 1480s, 1490s, and so on and so forth. So that kind of move is the type where you're letting things work all day. You feel pretty confident it's working, and it swipes up, and you're faced with that decision. Okay, maybe I've got too much now that it's starting to turn. So you have that small window to take size off, or kind of see what it does. And you guys know the famous last words is see what it does. So for me, there's like that adjustment period of like a dime. So, it swipes up 30 cents and then it's like, hanging around a dime, and then it starts to go again. So at that point, that for me was the spot to move on, since I did not downsize into sub 14. I should have, but I fumbled that opportunity. Point being is that on Friday, straight down, but I also captured some gains along the way, which, was what I should have done the prior time. It would have been a lot better of a trade for me. But then let it work the rest of the day as it stayed heavy. And I probably would have resized in, but I was off desk and I was just kind of letting it work with a stop and then covered at the lows. Anyway, that's an example of my A+, my wheelhouse coming into, what I want to trade, versus just waking up and saying, okay, I'm going to trade this and trade that and try to figure it out. That's what a lot of people do. And I think that if you just focus on what you're best at, and the days that there's nothing, you don't need to trade. And for so many years, traded every minute, every day, right? You don't need to. And you will notice that you don't need to. You will notice that your gains will probably start to go up and you'll be less stressed and less, kind of, where am I going with this trade? Because you're going to have confidence in that setup that you're familiar with, that you were patient with for it to come to you. That said, we talked about the lower float type names last week. We had SHPH, we had PIXY. There's trades there, and I've definitely been trading PIXY just out of the morning and the first move. But once it gets in that consolidation pattern, sideways, you start to develop some sort of channel, and we can go over that. But if you look at PIXY, look at, I think it was Wednesday or Thursday, 1950s to about 2250, 23. And it just started to get in a pattern of sideways action. And AMD did the same thing on Friday. We saw the same thing on ISEE. And that was, I think, 1460s to 1530s on ISEE. The sooner you recognize the channel that they're in, the better you're going to be able to react to certain situations. And any time that something comes back, catches again, I start to size down because I know that if it continues to go higher, everybody's going to be on the wrong side. And if it stays lower, I can always rescale in. And that's why, like AMD on Friday, there was I think it was whatever it was, 30s, and it just kept on absorbing. And I kept on mentioning it in the room just because I don't want to see people get bent up thinking that it has to fade when it's showing you right in front of, hey, we're holding right here. And if you don't recognize that and you continue to scale and you continue to assume that it has to break, well, when it spikes the other way, good luck, right? The longer it stays in that channel, the less edge you have. And the perfect examples of that last week was PIXY, AMD, and ISEE. Recognizing where it's in that consolidation pattern, because that's when you're either going to have the next move up or move down. And if you're incorrectly positioned, it happens faster than you think because it's breaking out of that consolidation. So the move is going to be fast. So those are really the things to look out for right now. Everything else is same as what I've been going over. So I don't want to beat those points over and over and over again and make Sunday video me saying the same thing every single week. So I definitely asked for some questions for this week to go over. But one piece before is Traders for a Cause. So we are fastly approaching. I think it's 2 weeks. And so I'm going to start to get real busy. This week I have a golf tournament on Thursday. Next week I have a wedding in Arizona, which I'm going to meet up with some awesome traders out there. And we're going to do some fun stuff and produce some content for the channel. Hopefully you guys have been paying attention to the channel and the interviews that we've been doing. We just dropped Sang Lucci last week, midweek, and some really amazing feedback. So we're going to try to keep up with it. The response has been awesome, and the interviews are doing really, really well. So I'm excited about it. And I put out a tweet the other day about asking for other people that you'd like to see interviewed. My goal with this channel is just to provide solid content. You guys see firsthand, I'm not here, selling every single Sunday. I don't care about that kind of stuff. Right now, all I care about is producing good content. And, if it makes you a better trader, great. And that's really all it's about. One trader finds success from something they heard and it betters them, whether it's in trading or life, then we've done a good job. So anyway, Traders for Cause is the following week after that. And for those that did not get a ticket, we have virtual access. So there'll be an email going out later today or tonight. And one of the good surprises, everybody that is a Project Impact member. So if you guys remember, we did all those virtual Traders for Cause events during COVID and all that kind of stuff. And we launched Project Impact. Project Impact is basically a pledge-based, subscription, for lack of a better word, where annually, $2.99, and you have access to all the videos. And this year, we're extending the Traders for a Cause event to you for free. So for all those that are Project Impact members, you have access to Las Vegas Traders for a Cause virtually. If you do not, or if you have not made a pledge to Project Impact, you have a chance here to have access to Traders for a Cause. But here is the thing. We have one person that is pledging a ticket, and we have a hotel room. For one of those people, we're going to run a raffle. Everybody that buys between now and Saturday will have a chance to come in person to Las Vegas. The only thing you have to cover is your airfare. So you're going to have the hotel, the conference, VIP access, so you can come to the VIP party on Thursday night. And that's that. Access to the conference as well, obviously. So again, Project Impact, we'll have a link. And if you guys want to come and be part of it virtually, that's how you can if you did not get a ticket to be in person yourself. Now, let's flash forward. And every question that I answer today, you guys get a t-shirt. So I appreciate you guys reaching out on Twitter and asking, a question. I'm not going to pick all of them. I pick, ones that I think will benefit other people. And so I'm going to fly through those as well. First one is, please tell more about identifying key levels from your talk. I see it's not just support and resistance. You see how they soak at these points, etc. So that's exactly right. It's not just a prior level of support or resistance. Sometimes, support could be a little bit lower, but something maybe happened a little bit higher that, I remember from the ride up or the ride down, right? So for me, I always look at where all that volume exchanges and where was a moment where I was like, that, I'm taking note of that action because that was a really, really big move. There was a lot of volume that went off. And what happens is, if you go back 5 years, like that was the spot, right? That was the exchange and it was over. But now there's just so many fake outs that you have to just kind of, take in what you see. And then as the trade progresses, utilize what you've kind of gathered to make the decision when the trade finally starts to break down. Okay, back at 10 a.m., this happened. I remember that. It broke this level. Now I'm interested because blah, 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 blah. Verse, all right, stuff move. It's a short, right? Because as you guys know, now you see a stuff move, slams down right back to where it was trading at a couple minutes before, and it continues to go. Before, it used to be stuff move, done, over. But now there's just so much demand, so many traders, so many shorts, just so much volume and liquidity back and forth that these things are hanging on longer than you would expect. So it's just another one of those, you have to wait for prior levels to break down or break out, depending on the side that you're on. So yes, it's not just support and resistance. However, looking left, look at where it was holding. And if you draw those lines, I promise you it will help you, because I even had a conversation with somebody on Friday in the room and they were saying, hey, these are the two key levels that I'm interested in. And I was like, I agree. That was the prior level of the prior level of support. And if they start to peak out, then at that point, I would probably be interested. And no offense to them, but later on in the day, they PM me and are like, I stepped in front of it and, I shouldn't have done that. I kept on going and blah, 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 blah. And we look back at the chart, it never breached the levels that they were talking about. So I reminded them, draw those lines right on the chart to remind you visually right in front of you. If you're shorting it, you're just shorting it to short it, right? So we all do it, and it's fine if it's small, if it's a starter and you can go for a ride. But if you are sizing against, if you're anticipating, this thing to turn, not in this market, it doesn't work anymore. If it does, it's going to work randomly and you're not going to have that, consistency that you're looking for. Next question is, how do you recognize the magnitude of a setup? Obviously, you can tell BBBY types are typically going to pull, but the fridge trades that you'll post sometimes, basically bell to bell. What separates bell to bell from the 10 a.m. trade? So typically the A plus in my mind are the names that go up and up and up and up without that pullback. A lot of times you see these wicks, right? The wicks increase longevity because if you think about it, there's been no reason to sell it. Every time it comes back, it gets soaked up. But it's already kind of desensitized longs from these dips. You know, they're kind of used to it. But if you're referring to a trade that's just kind of going straight up, straight up, straight up, there's been no pullback. And in my opinion, the longs will be very, very sensitive to any little hiccup, any little pullback. And if that's the case, as soon as it does pull back, that's when you see, you know, the elevator friggin' go down fast, right? And you got the staircase up and the elevator just straight down. And that's because they haven't been kind of desensitized along the way. And instead it's just like this. And as soon as it starts to go down, they're like, oh boy, this is different. I gotta go. Boom, market sell. And we get that fast, instant gratification, which is what I like on those. And the best part about instant gratification is not necessarily that that's the end of the trade, but a lot of times the biggest part of the trade comes next. And so at that point, you've got this instant, you know, kind of gratification that you're on the right side of the trade. You've got this, you know, unrealized P&L. And that's when I can start to use that unrealized gain to my advantage and start to scale into the trade, you know, with, you know, some people like the word house is money, others don't, but same concept. You've got a padding, and now I can utilize that padding because at the end of the day, day trading, we're here. We take risk to make money, right? So yeah, I'm adding on risk and adding on risk because, you know, I've got the padding, I'm on the right side to potentially make more. But as I size up and as I get more aggressive on those, you have to make sure that you're paying attention. And if we get that swipe up like ISEE on Wednesday or Thursday, whatever day it was, you have to make sure that you size back out before it's too late and you've got way too many. Next question. Most important 3 to 5 things you look for on your long swing setups. You talk about the wicks, level soaking, and big picture setups, but it's hard to differentiate your long trades from your overextended names that you look for on failed follow through, especially when there isn't a theme. So it just depends on, you know, kind of the current market environment plays a big role. If market's tanking, probably not going to be looking for those types of setups. But what is working right now? We've got this big move, consolidate, starts to kind of grind out, and it peaks out at a particular level. As soon as it gets over that, it breaks out. Or big volume, and then all these wicks start to get soaked up, right? And then you have a good risk reward. You've got a catalyst, you've got a turnaround story. You know, AVYA was a turnaround story, for example. Stuff like TBLT and RDBX, if you guys remember, same kind of chart. PGY on Friday, I missed that, but I was watching. Same sort of, you know, you've got steady unwind, 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 unwind. And so you've got big red candles getting smaller and smaller and smaller. So you're getting to the point where, you know, the supply is starting to diminish, the volume's gone. And people get excited about that first pop up, but a lot of times it's just, you know, not necessarily a fake pop, but it's the first sign of life, so people start to sell it back down. If it starts to hold after it does the pop, consolidate, and starts to base higher, just like TBLT, you know, if you tried to find the bottom for the last week, you know, you probably, you know, maybe broke even at best. But if you saw the first day it ramped up, well, there was many days. It ramped up and then just faded off. Ramped up, faded off. But the first time that it ramped up and started to hold a higher base, that's when I got interested. And the 260 started to base and we had the move towards 310 or something pre-market. But, you know, nothing crazy. It didn't turn into a huge move yet anyway. But that's how, you know, I found the RDBX types or the Rev types, you know, that kind of chart setup. PGY is another, or Fridge, FRGE. But typically, I want to see it ramp up, consolidate, hold higher lows, and, you know, maybe it should have died. Should have died, should have faded off, and, you know, other things are also breaking out. We're in a hot market. Small caps are going. Market's going, right? You've got to have all those things kind of start to align where people not necessarily have more FOMO, but, you know, essentially they're more willing to pay up. And, you know, you need to be in that kind of market as well. Catalysts always help. For sure, it brings in different kind of buyers, but sometimes these are just technical trades where, you know, the selling pressure finally slows, whoever's going to bail bails, and then, you know, it comes back up on air. Next one is, how do you set stop so you don't get stopped out on random push? How do I know the trade thesis is gone wrong? Gone wrong. So I rarely use actual stops, but they are definitely helpful. I did on Friday. I don't trade on Saturdays. I did on Friday because I had a meeting at 1. And just having that stop gives you the peace of mind. You don't always have to keep on checking your phone and doing all the stuff that you shouldn't be doing when you're off your desk. If you're off your desk, you should be off your desk and relaxing. So just that stop gives you peace of mind. And usually I think about where it would have to test, where the prior highs were, and then give it a little bit of a buffer. Because if you're putting your stop at the same place as everybody else, what do you think is going to happen? It's going to go take you out. You're going to blame the market makers. You're going to blame the market, and then it's going to fade back off. So you can always size down a little bit more and give yourself a little bit more buffer on the stop so that you can let it kind of work. But when the trade thesis goes wrong, it's where is the trade wrong? What makes your thesis wrong? So if you were looking for it to fade and it starts to hold higher lows, it starts to reclaim VWAP, is that part of your thesis, or were you expecting it to fail? So when it stops doing what you expected, then you should be adjusting. For me, somebody had asked me this question on Friday, but where do I cover? Like IC or any of those types of trades that I typically take. I think RYTM was a recent one too. But any flush and speeds up to the downside, I want to be there for some. Yeah, it could keep on going. Yeah, maybe I cover too early. But in this market, there's just so many recoveries that it's a pain. It's a pain if you're not covering and taking some exposure off. So anytime it speeds up to the downside, I want to lock some in. Or anytime it kind of pulls, consolidates, and starts to grind back up, you want to reevaluate your size. So ISEE did that on Friday. It started to come back up. First test, and then it stayed heavy. Had it started to form a base, started to firm up, I would have sized down. It's a perfect example of that. Or something like ISEE on Wednesday or Thursday, whenever it was, when we had that 14 to 1430 push. Last one is, Nate, when you cut a starter, plus when to cut a starter and when to add if it goes against, or never add, and does float rotation come into picture while we are at it? So first and foremost, float rotation happens every single day these days. There's just so much volume in the market. But for me, when to cut a starter, it just depends. Usually I don't size very much on my first entry, because I take it because I think I'm right. And I think that this is the peak. And if I get it, usually sometimes it flushes out and it might form a new base. That becomes the level where I want to scale. So let's just say I want 10,000 shares and I start in 500 shares. It's going to flush out potentially if I have a good entry. And it's either can consolidate and continue on highs, and I still have my 500 shares, and it's whatever, it's a starter. Or it slams down, and then it starts to peak out, and it gets heavy at this level, and then I start to scale in versus my entry. That's how I would scale in. I would prefer not to scale into a loser. Now, if I have a starter, and it goes a lot higher, and then it sets up, it's all about the setup. In my mind, that's not adding to a loser. You're waiting. You've been patiently waiting for that setup. But if you're adding to a loser in the sense that you've already sized up, you've already added, and it's not doing what you thought, that's when you're going to run into a problem. So just be cautious with that. But yeah, like I said, float rotation happens literally every single day. And in this market, the lower the float, it's just not worth it. In my opinion, it's not worth it, especially with the circuit halts these days. You literally can end your career in one trade off, even 1,000 shares. Literally 1,000 shares if something goes from 30, 40, 50, 60, 90, 100, 200, 500. We just saw it 2 weeks ago. Had a feeling, we've been talking about it since the MEGL IPO, had a feeling we're going to have something like that. And it's just, they'll reel you in, but it's just not worth it. Even like the Pixie types and these other SHPH during the day, you look at it and you're like, that would have been great. It's just not worth it. I'd rather have liquidity. I always focus on heavy liquidity. And I'm not just talking volume. I'm also talking about the way in which it trades. If it's going to swipe $7 one way and you have too many, that's a really, really bad day. So that's it. Let's get into scan for the week ahead. All right, guys. So Sunday scan, as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're good with that and you want to understand what makes me take a trade, what I feel has proper edge and good reward versus the risk and all that good stuff, what's working in this market, what's not, then you're in the right spot. But as always, if you're looking for somebody to tell you what to buy or sell, I mean, good luck, but you're not going to find that here. Now, like I said, this scans have been a little bit different the last couple of weeks just because it's a different market. Usually I'm rolling out of bed, I'm ready to go. There's 10 different setups, 2 really good A pluses, and we're just not in that market. That's not to say that there's not opportunity. There is, leading up to this market, a lot of people were not performing. And, I was. And now this past week, I probably underperformed like crazy compared to what some other traders might have been doing if they had just gone long on a couple different names. So you have to know what you're good at. You have to know when you need to take a step back. You need to know what you need to stay away from. And, for me, those are the low floaters that we talked about, the pixie type things. I might take a trade here and there, but I am not borrowing size. I am not going aggressive because it's not worth it. Your entire career could be gone in one wrong circuit halt. So it's just not worth it. It's a new risk that's out there that hasn't been for, a very long time. The market is continually evolving. And, these are the things that you need to be aware of as a trader. You get those warning signs and you look at something, you're like, whew, good thing I wasn't there. Things like that. These are the times to look back at the liquidation plays on some of those China pumps that just went down 85% in the day. You look at some of the size that maybe you were taking compared to what if they held it? What if it went into a circuit up? And some of them did. But what if it didn't and it went into a perpetual squeeze and went to 100, 200, 300, right? The risk that I had at that time, I would have blown up for sure. But you have to understand cycles. And sometimes people are slow to realize that a cycle is getting crowded, right? We've talked about it last week where the full day unwinders was like a big thing. Now they're super, super crowded. That doesn't mean that they won't come back. They will. But it goes through a cycle. And then everybody gives up, it becomes uncrowded, and then, they come back. Same thing with these. Everybody wants a piece of these IPOs, and whether it's for the 85% drop or because they go, 7,000% on IPO day, right? So depending on which one they go or which way they go, you're either going to be happy or really sad and out of money. So to me, there's no edge there right now. There will be, and there's definitely going to be. But for you to trade them and try to anticipate which way something's going to go, just look at SHPH last week. Starts to kind of fade off, and then bam, up $10 a share into another circuit halt, like crazy risk. It's not worth it. So anyway, and if you've been trading them well, congrats. But in my opinion, it's reckless. It's fine to trade them with little bit of size, but if you're in there with any size and literally any conviction, good luck. You're gonna need it. But anyway. I see higher the better, really nice trader, but there's no reason to kind of make too much of a plan yet. I think that this is either going to gap up, pull back a little bit and continue on, or it's going to gap up and just fade off. Yeah, it's going to go one way or the other, right? So there's no real point to make a trade full trade plan yet. We just need to see how it opens. And for me, it's a trend join, 9:45, 10 a.m. plus. So if it starts to firm up, I do think it could have room to go back up towards 20. I do think that there's still a lot of shorts here. If it gaps up and it has a little bit of trouble, so if we're looking, left a little bit, ideally we get a push up towards 19. If 19 exhausts out and starts to fail, 1890s and stays heavy, then that's the trade that I want. So that's pretty much where I'd be looking at, and you can kind of see that we've got a little bit of a channel over here. If it does gap up over 19, then the next level would be towards the 1940, 1950s for an exhaustion move. But other than that, I'm just going to be prepared to wake up. Are we up 50 cents, down 50 cents, and then watch for a trade setup from there. And that's just the type of market we're in. Normally maybe I'd have much more of a kind of game plan, but there's no real sense. Same thing with BBBY and AMC. I think that both of these are going to be setting up nicely. One thing about AMC is it always has two extra legs than you think. So just let it do its thing. There will be a point, in my opinion, where this starts to speed up. If it doesn't gap down and stay heavy. If it gaps down and stays heavy, then I want to press on that. I want to lean on that for the retrace back to where it came from. Obviously, you could probably trade ape with it. It's not as liquid, but I think that with BBBY and AMC, we will have a retrace, but you need the market to agree. So if we had a huge market gap up and starts to fade, I'd probably be looking to fade these. If we have a market, maybe a week open, it starts to rally, these are going to probably rally too. But those are the top three. I see BBBY and AMC for multiple reasons. One, the range, the volume, liquidity, and I guess it's really only two reasons. Range and volume. And that's top three watches for me on the week ahead. Rivian's been great. This one's been respecting the channel extremely well. This is another great example of identifying, when it starts to get into a range and whether or not you are expecting it to fail and you've got way too much size, or if you're seeing this and hands off a little bit, right? And so we had the same thing on AMD intraday, and I had mentioned it in the room. So you've got that action over here. So you've got all these exhaustion candles, and you've got basically 8430s was the level. So you can see, and the sooner that you can see this as a trader, the more you're going to be able to pull back and say, okay, maybe I shouldn't be trying to anticipate which way it's going to go, because you can clearly see that there's no real edge, right? And there's going to be flushes under it, and it comes right back up, it comes right back under. But if you can identify overall where it's, kind of having an issue of resistance and where it's got some support, it's going to help you. And you can see that same level ends up being, support later on as well. So Rivian, AMD, those ones I think will be great traders. I have them under failed follow through. I'm hopeful they continue to go higher, but I'm going to be watching for a failed follow through setup. We've got GOVX as well. GOVX had a nice breakout. This is another one of those charts. So, you've got this steady, unwind. Now the candles start to get smaller and smaller. The volume starts to go way low, and then all of a sudden it returns. 62 million shares compared to 900,000 the day before. And this is the same thing as, something like, PGY, where it's down, starts to go sideways. We had the same thing on Fridge when it bounced over here and over here. We had same thing on TBLT. Same kind of setup, and I don't know if the chart, yeah, it does. RDBX, same deal, if you guys remember when we talked about this on Sunday video as well. So that setup, that move, those charts are working. It's been a great opportunity the last couple weeks, but they are having nice breakouts, but sometimes I end up overstaying, like that AVYA. I had really nice entry, 110, 120, 130s. Nice consolidation. I sold some over into this day. I sold some more. But could I have sold a lot more? For sure. Did I probably hold too long on probably half the size? Yeah, probably. But it is what it is, and I'm going to go ahead and just, see what happens on the rest. But, I'm up, decently on it, and, I just want to let it work. However, we can always look back and say, well, I wish I did something different. But other ones on continuation, ALLK, I just was scanning this one. See this volume here this day, 37 million shares. It's getting absorbed. You can see that it's sort of in a 5 to basically 430s kind of channel. So if we start to see it bust over 5s and start to hold higher lows, I like this versus the 450 level. So I'll be watching to see if that starts to firm up. I wouldn't expect it to be like a one-day wonder and just go nuts. I'm thinking more of a slow kind of paced move, just like this TCRT that we've been talking about for a little while now. Now, I'm not in this either, but this one's been on Sunday video for a while and daily scan. But you can just kind of see that each kind of move is getting absorbed and it continues to go higher. So, you know, I'll continue to watch that. Maybe 455 starts to, you know, speed up a little bit and go from there. ABYA, like I said, I'm still positioned on that one. Do I wish I sold it all? For sure. I, you know, would be rebuying. Somebody asked me if I was going to rebuy what I had sold into the strength, and my answer is no until we start to see, you know, a base. You don't want to try to find the bottom. You know, if there's a flush opportunity, for sure you can trade that bounce, but you don't want to get in a habit of just rebuying it to rebuy it. You want to, you know, have a reason. And so I want to see this start to stabilize a little bit, start to firm up, and continue to go. If it doesn't, then, you know, forget it. A couple other ones, IMRA, potential liquidity trap. You can see that it actually had some some action over here, which is where it was stuck and kind of holding. If we start to base over 2, great, but really it's all about 220 in my mind. That's where we've had some. And I'll just draw it over here and then you can see it. So if you go like that and put the 220 on there and then go and check out the prior days, you can see that 220 has been sort of the issue that it's been having. Top, came back under, but top, right? So if this starts to base over 220s, we have a potential liquidity trap setup. But remember, like I've said, every single time we talk about liquidity trap, it could just be one last hurrah and then it fades off. Or if they hold trend, that's when you get those outlier moves. So a liquidity trap does not mean long, it's going to the moon. It means there's a potential here because there is a lot of volume here this day, 102 million, 47 million, and now there's only 3 million, right? So if it holds trend and it starts to base over the 220s, then, you know, we have a potential for an outlier squeeze. If it ramps into 220, a lot of volume hits, and it starts to fade off, then you probably had the rest of the cover come in, and, you know, it's going to fade back down. So be cautious getting too much conviction on a setup that's not really a setup. And then this party, I had it on the continuation, and then flipped it over to the failed follow through, and then back to the continuation after it's set up again. Really nice setup. Watch all dips, could have a nice breakout over basically this 260s range or so. So you can kind of see it setting up. You can see the wicks. And I think that 265 is going to be the key level to see this thing really take off. So watch all dips. Otherwise, if it does blow off and it fails, then we have the potential of, you know, unwind back under 230s, 220s, and so on and so forth. So we'll see what happens with that one. But again, so far, breakout mode, don't jump in front of it. The edge, in my opinion, is when things start to parabolic and you have that exhaustion move. You don't want to step in front in this market. There's no reason to. We have plenty of range. And I think that's about it. So I hope you guys have a fantastic rest of your weekend. And we'll catch you in the room on Monday. Don't forget, Traders for Cause Virtual. One of you who get it in the next week before Saturday will be coming to Vegas. All expenses paid, minus your airfare. So, can't wait to see you guys there, and have a good rest of the weekend.